Hey everybody, welcome to this free edition of our Trader User Group for the trading week ending D10 2021. I'm Preston Brent. Thanks for tuning in. Well, is it time for a Santa rally? Well, clearly by this last week's market action, it would certainly appear so, not only in the U.S. indexes, but in Europe and over in the Asia Pacific area as well. So let's take a look at them and just kind of see where we're going here. If we look at everybody was in the green except for the Russell. That's the only holdout, the U.S. small cap index. Otherwise, everybody had a strong week. Dow, S&P, Nasdaq, year to date, very strong numbers. Best sector performance, technology up almost 6% for the week. Worst, utilities, still up solid in the green for 2.6%. And then we see the annual sector performance, energy's up very strong, 56%, staples up still double digits. So this year has been an unusual rebound year from COVID last year. Very strong. We saw Apple, in fact, up almost 11% for the week. It's been up almost 20% over the past 3.5 weeks, and it's approaching close to $3 trillion valuation. Amazing. Top 5 stocks in the S&P 500 account for about 20% of the total gains this year for the entire index. It just gives you an idea of some of the mega cap tech stocks that are out there, primarily the FANG stocks, as you can see. If we look at the PE ratio, the forward is still elevated at 22.17. The dividend yield came in a little bit for the S&P on Friday's close at 1.29%. 10-year Treasury up a little bit from the prior week. It's higher than the dividend yield by almost 20 bips. Okay, that's going to continue to funnel money into the U.S. markets. You can see the S&P earnings yield is at 4.35%. Which is about 3% higher, a little over 3% higher than the 10-year Treasury, right? Still a lot of money out there flowing into the S&P. Current VIX came in a little bit this past week. The prior week's close was at 30.67. This week it closed at 18.69. So net down a little over 30% for the week. So vol came in, but it's still elevated. The markets are still staying relatively elevated, just given where we are right now. And of course, if we look at it, let's just take a look at some of the economic data that came out for the week this past week. The Labor Department, we had 184,000 U.S. citizens apply for unemployment benefits. This is the lowest number since 1969. But on the counter of that, we had a record 11 million people that are looking to find jobs, right? So, or job openings that are out there. We're getting, given the backdrop of this huge strength in the rebound in the labor market, inflation came in this week, this Friday. The CPI data came in at 6.8%. That's the highest jump since 1982, right? Remember the Fed's a prior week, a couple of weeks ago, Boom Powell, our illustrious Fed chair, came out and took away the word transitory, which I'm glad he finally did that. But still, inflation's running hot. And we're seeing all of that reflecting in some of these numbers here. Although the markets were really subdued. In fact, the markets moved up. Members, I'll go in a little bit more detail on why the markets moved up on such a high inflation data. And of course, if we look at U.S. Treasuries, bond traders are kind of taking some of this inflation in stride. We've got the Fed Fund Futures is pricing in 3 rate hikes next year now. One in June, one in September, and the third one in December of next year for a total rate hike of 75 basis points, 0.75%. In the scheme of things, that's not much coming off of 0%, but that's what the Fed Fund Futures is pricing in. We're going to get a lot more information next Wednesday when Boom Powell gets in front of the press, business press next Wednesday at 2:30 Eastern Standard Time on Wednesday, and goes through where the feds believe the markets are. So that will be a very interesting day. Okay. Meanwhile, if we come over and look at Europe, as you saw, and let me just show you the index here for the rest of the planet. In Europe, very strong, solid in the green. Year to date, solid in the green. Okay, all of them up a lot. They are still getting stricter on some of their shutdowns because of the Omicron variant, which I think is a big mistake. It's already affecting some of their economies, so we can see that continue on. GDP in the UK even though it expanded 10 basis points in October, it was 50 basis points less from the prior month. So things are slowing down over in Europe just because they're overreacting, I think, to these shutdowns and mass mandates. It's really pissing everybody off. I think the politicians have gone batshit crazy, but that's just my opinion. Probably a lot of others too. So, and if we come over and look at the Asian markets, you can see in a rare sign of solidarity, both European and Asian markets, some of the major indexes were all in the green. China was up 1.63%, a little over 5.5% year to date. Hang Seng was actually a rare week where it finished in the green. Year to date, it's still in a correction territory, almost 12% down. And if we look at Japan, one of the things is their new prime minister, Fumio Kishida. He came out and basically reiterated their plan to do large scale economic quote unquote measures, which is he's talking about pumping in almost another $500 billion into that economy. So, money, markets love money. And that's what we're seeing out of Japan. And if we look at China, they're still having major turmoil in their real estate market. All right. Through a couple of key companies, Evergrande being the big one, but there's a lot of other ones underneath that are having trouble too. So what does China do? Same thing with Japan. They announced some more stimulus, but the way they do it is they cut their banks' reserve ratios, right? They cut them by 50 basis points. This is the second cut this year. So that is bolstering a lot of their very slow growth that we're seeing. I mean, their export growth slowed in November. And we're seeing on the inflation front, they're having higher inflation. Their PPI came in at 12.9%. So they're getting a lot of that. They're getting hit across many different fronts. Real estate problems, inflation problems, growth problems. So they do what every politician seems to do, even in China, is let's put more money in the economy. So we're going to see that kind of translate itself out. So that's what's going on. I want to go over and show you some of the indexes here and just kind of show you where we're floating around right now. And I'm going to start with the E-mini S&P 500 futures. And you can see when it comes up on your screen here that we pretty much recaptured just about all of the losses we suffered when the Omicron variant hit. You can see over here the Omicron variant, and we were kind of running here, and then when it hit, we gave up another almost a little over 5%, and then we've come right back up again once we've seen this, and it's coming out as no more strong than the common flu. Right, not killing anybody, but makes people get sick. And most people that are catching it already have had the vaccine, so perhaps that's a reason. But either way, it's not a threat in the economy right now. The bigger threat is going to be inflation and what the Feds are going to do next Wednesday. All right, now we are in the seasonality of the strongest time of the year, the strongest 2 or 3 week period of the year for the U.S. market. So I believe unless the Feds really screw this up on Wednesday, we'll have next week new all-time highs. All right, we're just south of new all-time highs right now at 47, 40, 50. Remember, my year-end forecast was anywhere from 4,600 up to 4750, and we've traversed my entire range. In fact, we hit a low down here of around 4500, and now we're back up over 4704. Just a huge move in a very short period of time. Okay. And of course, if we look at all the other indexes, we've regained the 50 EMA. You could see my support points here. We've regained all the key indicators. So everything has kind of been corrected from the week prior. If we look at the Dow, you'll see the Dow is also back up over its 50 EMA. Never almost went down and found support at the 200, but we're back up. We're running into my original resistance area of the Dow. Okay. And then, of course, if we look at the Nasdaq Futures, you can see Nasdaq Futures also regained its 50 EMA right here. And we're holding that as well. The only one that has got a lot of damage right now is the Russell. And if we look at the Russell Futures, it's amazing. Look at this, guys. We are hovering right on the 200 EMA. All right. Now, if this breaks, I think the rest of the market's going to come unglued. We should not have a divergence of the small cap and large cap like this, but there is just a ton of money right now that's leaving small cap and mid cap and going into large cap, primarily large cap tech. Okay. And that's what we're seeing here on the markets. And of course, if we come down here and if we look at Bitcoin, Bitcoin's had a very interesting 2-week play here. All right. If we look at where it did this week, it was up Friday, 100 points or so, but we're finding support around the 200 EMA, right, which is just above the 61.8 fib node. I had called a pullback for right around 38.2. We sat there for a little bit and then we actually sold off a little bit more. We may move even a little bit lower. The fear when you get a big move like this is the first move up solid. Look for a bull trap, a rollover, a longer term consolidation before it moves up higher again. So for those of you that like Bitcoin, that's one of the things that we're looking at here. Okay. So that's kind of what I'm seeing. And then, of course, if we look at the tracking ETF for China, which is a larger ETF track, let me rephrase that. It tracks more stocks and companies. China finally this week moved up into the green, right? You could see the 2020 close. It gapped up, finally in the green for China towards the end of the year. Remember, we had a low down here. We were almost in bear market territory for China, and this low was made back here in the summer. And then it's just been nothing but an EKG heart measure diagram of the markets up and down, and we finally broke out of this range, clearing the closing price of 2020. Okay, so this is kind of where I want to see us stay above here, just for our U.S. purposes. And of course, if we look at the all-world index, we're still well off the highs. This all-world index, and primarily because Asian markets are really affecting it, emerging markets are really not as strong as they should be. European markets are fairly strong. But this all-world index, when you throw everybody in, it just shows the second and third largest economies are not that strong. Okay, that would be China and Japan, mostly in the Asian Pacific area, really. If we come over here and look at volatility, if we look at the VIX, you can see here it did close the week, as I said, at 1869. You can see this big move here. For those of you that are non-members, we have a way of trading volatility where we've been so far the trade is triggered 10 times this year, and 10 times it's been a successful trade. A lot of our members took it the last couple of times because I was posting it in our secret trader, and both times were successful. So it's a great way to trade volatility. It's probably different than the way I would say 90% of the people trade volatility, but this is a high probability trade, and that's what we like to do. So here we go. The VIX is coming back down. We're in the yellow, so we're still elevated. We're still elevated here. And if we look at the back month term structure of volatility, we're well in the green. So that shows going out through January, there's not a lot of fear in the markets right now. Now, the December volatility futures are going to expire this week, and then we're going to roll out until January being the front month vol futures. So we're going to follow this closely. We were only in the red one day for the back month term structure. What I'm looking for, generally, is just an FYI. Anytime the markets go down, check the term structure of volatility. Yeah, the VIX is going to plow up, but you got to look at where it is in relation to the vol futures. And that'll help you out determine, is this fear or just more of a simple orderly profit-taking move? We're going to get some chop going into the end of the year for sure. And of course, if we come down here and look at treasuries and we look at the bond market, it finished flat on Friday. You can see, and I've been saying this to you guys ever since I've been doing these free weekly roundups here. But anytime the Dow futures, let me just back it out a little bit and zoom back in. Anytime the Dow futures is over the 200 EMA this year, which is the yellow line, you want to look at shorting it every time. All right, and I said it over here and I said it over here. So it's just, I think this is going to hold up for a while. You want to short it. And of course, if we look at interest rates, you can see we actually moved up a little bit on Friday, right? A little bit off the lows here, bouncing back up. The 50 crossed the 200 to the downside. Members, I'll go through a little bit more analysis on why the interest rates are so low. And we'll just kind of spend a little bit of time on it. I've covered it before, but I think it's really healthy to understand it. Okay. US dollar index. Right here, we're having a hard time up here. I think we may have one final push, but I would be short the dollar, long the euro. That would be my preferred trade. And then, of course, if we swing down and look at gold, No trade on gold right now. I know eventually I believe it's going to break out, but right now I'm staying out of gold. Okay. Same thing with copper, same thing with silver. Okay. Now, when we do get a trigger to the upside, I'd prefer that we be in silver instead of gold. All right. Members, we'll go a little bit more detail on the commodity there, but that's a little bit what I'm seeing here. Oil. This was my support point in oil. You can see here that we may come back and retest this, but I think by the end of next year, oil is going to be higher than this. So I've got some great trades set up for our members in oil, which I'll review with you on our weekly market watch this Sunday at 8 p.m. Eastern Standard Time. Excuse me. If you're not a member, I highly encourage you to come in and check us out. We're doing well. Just our one trade, you could follow us on trading volatility, will pay for our membership 2 or 3 times over. All right. And keep in mind, we've done 10 out of 10 this year, all successful. All right, everybody. Have a really great weekend. Members, I'll see you tomorrow night at our weekly market watch. Ciao.